Okay, this is just going over a play of mine, trying to learn from a lesson here that I lost on. Took a loss with this one. Tesla was the play. 350 strike. February 14th, 25th, the end of the week. It was a call. I bought 4 of them for an average price of $7.75 on the 11th of February today. And I got in at 9.36. First mistake is I bought 4 at 9.36. I bought too much and I bought it too early. Should at least wait. At least for me, I want to learn to at least, unless I'm just sure, like very sure, not 100%, but very sure. If not 100%, at least 70% that it's going to go up. But other than that, if I'm not, I don't need to buy within the first 15 minutes or first 30 minutes of trading. So that's what this is when I sold it at 10:39. So kept it just for an hour too long. Sold for $5.15 each. And of course, when you buy a contract, it's $5.15, but it's 100 contracts in one, exponential. So it really costs you $515 each contract. So $515 times 4 is what I had to sell it at for a loss, versus buying it for $7.75 at 9.36. So here's the chart for Tesla. Tesla just had a very bad day. Very bad day. I'm going to zoom out. I'm going to change it from 2 minute to 1 minute, so I can put a line exactly at 9.36 from when I bought it and 10.38 from when I sold it. So each candle is 1 minute in this chart. And as you can see, I bought it right here at the top of that green candle. Sorry, it zoomed out on me. So I bought it right there. And I'll add a vertical line on there. Alright, so that's when I bought it. I need 10.38 because that's when I sold it. Sorry. So 10.38. Hold on. Right here. This is what I sold it. So, as you can see, I pretty much cherry picked the top. Unfortunately, I saw this I saw this strong green candle right there. And then I thought, okay, I'm looking for like what I recently learned from a YouTube video that someone I worked with put me on, and it shows like the check mark strategy, where it pulls down and then goes up more than it pulls down and makes like a check mark. And I've looked at charts and I've seen it, and it's, you know, just to confirm the strategy. But unfortunately, this wasn't it. So I got in the next candle and went up and peaked out at 349. One thing I could have done that I didn't do was when it peaked at 349.37, even though it wasn't for much of a gain because it's just a small amount up from where I got in, I could have just put on my stop loss and hopefully let it run. But it's kind of early and it's volatile, so probably would have got to stop out because it didn't run up much. So it came down. Came back up. And then came down hard. So, I don't know why this line is not. So I had one line right here for me to get out. For the first, for me to like consider getting out. I had another line right here that I drew for me to consider being stopped out. As you can see, it went past both of those lines and I didn't get out like I was supposed to. Just thinking, hey, it might turn around, just hoping. And that's one thing you really don't want to do when trading. It's just hoping. Not really looking at the chart, looking at the candles, looking at the volume, looking at the moving averages, looking at the support and resistance being broken or held up, whichever. You don't want to trade and just throw a trade out there and be hoping. Sometimes it works, but most times it don't. So it really broke. Right here should have been a definite. Okay. Let me get out. And I didn't. So I held on. And as you can see, that support that it broke with the sad face became resistance. Why my pen don't write straight? I don't know. So I'm gonna zoom out. So this black line, You see it wanted to come above that black line, but it never really, it wicked above it one time right there. You see it. So it wicked above it. That second black line that I have for support is now holding up as resistance. It's also catching resistance against the blue line, which is the 48 EMA. This line right here. And it tries and tries. Like I said, these are 1 minute candles, so for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 7, 28. So pretty much for about 28 to 30 minutes, it was trying to get back above the black line, but it couldn't. And it flushed down hard. 335 from almost 344 or 349, where yours truly got in at. So I'm glad I got out of this play, because you can see it went a lot much further down from the red line where I sold it. And I guess I kind of sensed it coming, or just got tired of waiting. And I'm glad I did, because I took, 25% loss? 25 or 30% loss. And it would have been a lot worse if I would have held it and let it go down almost $10 more. So sometimes you have those plays that just run up from open bell and just go straight up and go straight up. I don't believe in luck, but it seems like when I give it a try and get in early and see if it, get one of those straight up days, I don't seem to get it. I seem to catch the top on the down days when I try that up move straight from the beginning. So another thing I could have did was, if I would have looked at my charts, I would have saw resistance. If I would have waited, or even before I waited, I would have known, okay, this red line is always a heavy resistance. I mean, this is 1 minute. We can go to the 5 minute. That line is still there. That line is still there, 349.37. We can go to, let's try the 15. You still got resistance up above. And let's just zoom out. This is another thing I messed up on. If I woke up late, that's one thing. I woke up, it was after 9 o'clock. No time to really look at stuff. But if I would have looked at it properly, like I normally try to do, I would see that, look, this is in a downtrend. And you don't want to try to play a reversal against the trend. And if you do, you got to make sure you're in and out. And then, use your stop loss. That's a downtrend. It rejected against that red line. And then it rejected against the blue line, not even making it close to the red line again. So lesson is, wake up early, do your pre-market analysis. As I would have saw that this is sideways movement. After being down yesterday for half the day, the second half of the day, sideways movement, meaning is going to break out to the upside or downside, and it did a fake out to the upside and market open at 9:30 to the downside. If I would have took my time and waited on it to break that support and got in a put, that would have been a lot better move. So, you know, tough lessons. I mean, I lost $1,000 on this play right here. Lost $1,000 on that play, so tough lesson. But you know, we'll recover. You know, do what we're doing right now, going back and looking at the chart and just hoping to remember it when you're in action. You know, when you're working and you're in action. That's why I do this, so I can go back and, you know, look at this video and look at, you know, my lessons and, you know, remember them and apply them, hopefully. But you know, it's Tuesday. I made 500 yesterday. I lost 1,000 today. So for the week, I'm only down 500. That's doable to make 500 and come back flat. Be even better if I make, you know, make more and come back positive. So, you know, we're gonna keep trying. Better to try than to do nothing. You know, some say. But gonna make it happen. Just gotta be patient. Even if it's gotta be patient. Even if you see it shoot straight up and keep shooting up in the first 15 minutes. You just gotta be satisfied or content with missing that straight up shot at 9:30, or you know, the first 15 minutes, because when you don't respect that, and you're not you know, as great as, you know, setting your stop loss, or you know, your mental stop loss or your physical stop loss, when you actually put in the order to stop you out, to sell, to stop, you know, any more losses, or even if you're winning, to, you know, to keep your wins or to stop any losses. That's what a stop loss is for. It keeps it from going down more. Whether you're making money, you don't want to lose that money, or you're losing money and you don't want to lose more money. That's what the stop loss is for. So unless you're, you know, you're real content and disciplined with setting that stop loss, physical or mental, you just have to be content with missing that run up as soon as the open bell. Because, you know, days like this, when you don't zoom out and wake up early enough to look at your pre-market, do your pre-market analysis, and see that it's in a downtrend, been in a downtrend for a little while, pretty much ever since earnings. Alright, so I don't want to make this video too long. Try to keep them short, you know, make it a quick lesson for me to go back and look at. So that's it. Happy trading, keep learning, keep striving for greatness.